Hello and welcome to yet another video in our 3CD-MRL utility FY 25-26 series. In this episode 3, we are explaining the function with relate to preparation of financial statements for non-corporate entities, which is recommendatory for FY 24-25 and mandatory for next year, the Honorable ICI. So now let us explore how we can prepare financial statements in this utility using tally data. So this is the first function on instruction sheets. And before proceeding further, I would like to just clarify a concept that this linkage of this utility with tally data is through the ODBC port. So we need to enable ODBC port in tally to for this import of data in this sheet. And how to enable the instructions are given are in this button for tally prime as well as the tally ERP9. Please go through the instructions and enable the tally ODBC port. Now for the current financial year, I have this tally 9. The financial year is 24-25 and the date of last entry is 31st March 25. That means this is a standalone 24-25 data, and the port for this data is 9100. Similarly, I have this previous year data with me, which is for 23-24, and the date of last entry is 31st March 24. That means this is a splitted standalone data, and the ODBC port is 9000. So now we start importing data and following step-by-step procedure for preparation of financial statements in this utility. So in step 1, as our previous year FY 23-24, the port is 9000. We import the data, this port, and the group data is imported successfully. Now for this current year, our port is 9100. So we import this 24-25 data. We merge both these group balances to confirm whether the closing balances of these groups match. So these are tallied for both the years. Now we import ledger balances for previous year, and then we import the ledger balances for current year, that is FY 24-25. Yes. After this, we come to an important step, that is matching of previous year closing balances with current year opening balances. As we have imported the tally data from two different tally backups, right, separately for FY 24 and FY 24-25. So we need to ensure whether the closing balances of previous year match with the opening balances of current year. So that is what the step 6 exactly does. Now here it gives two kinds of differences. One, which ledger accounts which were there in the previous year closing balances but are not found in the current year opening balances, and the ledger accounts which are matched but they do carry the difference in values of closing balances as compared to the current year opening balances. So now let us focus on the first difference. The total of balances not found is this in table 1 and in table 2. Table 1 is comparison of current previous year closing balance with current year opening balance, and table 2 is vice versa, that is comparing opening with previous year closing ledgers. So let us see why the difference is arising. Now if we take this first HDFC housing loan ledger account having balance 241640, we see that there is an identical account having a different nomenclature only, but which has a opening balance. That means this is not impacting the opening balances altogether, only nomenclature is different. Same is the situation with other not found accounts also. So we square off these not found accounts so that their impact is 0. And with respect to the accounts which carry differences like this proprietors capital account, we observe that in the previous year there were these ledgers which were related to proprietors capital account and were not transferred to the proprietors capital account. In current year, the opening balance is considered after these transfers have been accounted for. So overall, the balance in differential ledgers, there is no overall difference in the balances or current year accounts. So there is the impact is 0. So we accept the opening balances as it is for the current year consolidation. Okay, so we move ahead now. Now step 7 is to merge this ledger data for these 2 years, and this may take a little while depending on the volume of data. Now the opening balances are matched and the ledger data is consolidation is completed. The next important step 8, is with respect to handling the negative balances. For example, there may be negative balances in expenses or in incomes. Like expenses are expected to have debit balances, but there may be credit balances, that is these are negatives, and vice versa for income heads. And similarly for balance sheets also, assets and liabilities, assets are expected to have debit balances, whereas liabilities are expected to have credit balances. But if there are negative balances, then how to handle those balances, we need to specify. Generally, for in this example, see, this round of ledger has closing balance current year as well as previous year in negatives both, and this round of ledger is appearing in indirect expenses, that is expenses head. So this expenses head is carrying on negative balance. Generally for P&L balances, we net off this from the other expenses. So we select net off for here, and the P&L ledgers are being finalized now by the system. This may take a little while. Now the next step would be same procedure of handling negatives for the balance sheet items. But generally the difference between P&L and the balance sheet items is that balance sheet items are generally not netted off and they are kept as standalone. Let's see. For example, this ABCD Industries Limited, it is under Sunday creditors liabilities. It has credit balance in the current year, but it has debit balance in the previous year. So the question is how to handle this negative balance, that is debit balance in previous year. So we select it to be depicted as a standalone balance. That means this negative balance would become a positive balance and would be shown on the assets side, and the current year balance being a negative balance would be shown properly on the liabilities side under sundry creditors liabilities. Similar is the situation for this other heads also, right? So we select standalone for all these negatives in current and previous year. After this, the balance sheet ledgers are finalized, and now we can view the group wise financial statements. Now these are the financial statements. The balance sheet is tallied as well. There is no difference in the profit and loss account. It is also tallied with reference to the profit figure in books of accounts. Now, as we have seen in the previous discussion, this now the sundry debtors, these are appearing under liabilities, which is not a proper head, and as well there are sundry creditors appearing under assets and unsecured loans appearing under assets. The reason for this is the selection of standalone option. Now, the standalone option has converted these negative balances, right, into positives, and has transposed the site. For example, the unsecured loans, the negative balance in unsecured loans in previous year, yes, is ideally an asset. So this is being shown in the asset side, but the head or nomenclature is not proper. So we need to switch the heads right now, and for that purpose, these tables are important. Now let's start with the sundry debtors liabilities side. Now this sundry debtors liabilities side, this is ideally to be shown as current liabilities or sundry creditors. Okay. Now another head correction is this sundry creditors on asset side. Now the sundry creditors on asset sides are essentially loans and advances. So we switch this also, and again similar for unsecured loans. Unsecured loan asset side is again loans and advances. So we also propose to switch this all. Then we apply these switches. The switches have been applied and the financials are replaced. These are reflected in the this primary balances. See, this has changed to loans and advances, loans and advances, and this is changed to Sunday creditors liabilities. Now let us move further and finalize the ledger balances. Now one more aspect which is important in this financial statement is the selection of denominations. Now this gives us option to select denominations in which the financial statements are to be depicted. The options are like rounding of hundreds, thousands and lakhs. And if we apply this choice to the ledger balances, the ledger balances would be converted in those denominations. Yes. Now let us move to the next step to compile the profit and loss account. Now this compilation of profit and loss account is on sheet 19 to 25. Note 19 to 25 pertain to the notes to related to profit and loss account. Now see, the head is revenue from operation and sale of products, and to map ledgers over here we just double click the green cell and select the ledgers to be mapped to this particular head. Now these are sale ledgers. The values for current year and previous year are auto populated. Similarly, we start mapping for other heads also. Yes. Now this is note 21, cost of goods sold, and this pertains to purchase. Yes, let's go ahead and map the purchases ledgers. Then if there are any direct expenses, we will map. There are no direct expenses as such. So this is for the inventories at the beginning of year, which is stock opening stock in trade. So opening stock in hand is mapped over here. This is for closing stock in hand. Map this over here. Now employee benefit expenses like salaries, so salary expenses, and then depreciation, then interest expenses. Yes. Then we say power and fuel. There may not be a separated. We need to find the heads which we can club in here. So electricity expense is one of the heads, and well, let's see if there is, yes, there is generator expense also which we can club over here. So selection of multiple heads in the same cell will add up the totals over there. Let's see if there's only repairs and maintenance. Yes. And there is any, yes, there are pump maintenance expenses, so we add over there. Insurance. Yes. Traveling expenses. There are no traveling expenses as such, so there may be, let's see if there is, yes, there are conveyance expenses, then audit fees, printing and stationery. Yes. This communication, maybe mobile expenses. Yes. Legal fees and charges. Yes. And now let's see which expenses are remaining to be mapped. For example, we select all from here, and all those expenses which are still unmapped are highlighted in blue. Now this accounting charges, bank commission, computer expenses, newspaper refreshment, these all expenses are may appropriately be clubbed under miscellaneous, but this LFR recovery charges seem to be a direct expense. So let us go to the head of direct expense and map it over here. Now let's see if rest of all expenses, we select all, and these all expenses would be mapped to the miscellaneous expenses. Let's see if we have, yes, we have profit and loss account, which is tallied. Net profit loss as per figure is this, and difference with statement of profit and loss is nil, and there are no unmapped ledgers for profit and loss account. The list of unmapped ledgers can also be viewed from here. If there are any unmapped ledgers, there are no unmapped ledgers. So profit and loss account is now complete. Now see, on the similar lines, we can go ahead for step 12, which is for the balance sheet compilation. Now the important point here is note 3 and 11, this with respect to this owner's capital account and property, plant and equipment and intangible assets, these are to be filled up manually, and notes 4, 18 and 26 can be mapped based on our ledger data. So this is the proprietorship concern. So note 4 reserves and is not relevant. Yes, note 5 borrowings. This left hand side cells are for this long term borrowings, and right hand side cells are for this short term borrowings. So let's map. Let's see if we have secured loans. Yes. Now this is a long term borrowing, and hire purchase loan is a short term borrowing. Then there are secured loans which are repayable on demand, which are say this cash credit account and this OD account. And then there are unsecured loans from other parties which are repayable on demand. So we map these unsecured loans over here. Now since this is a proprietorship, so there is no deferred tax assets, and there are advances from customers, but those are not long-term liabilities, so we skip this also. Now this provisions are the long-term and short-term provisions. So left hand side for long-term and right hand side for short-term. So we have these short-term provisions, we map it over here, and then now we are in trade payables, that is sundry creditors. So sundry creditors are mapped here, and we have other current liabilities. Let's see if we have anything under this head. No, these are all sundry creditors assets, so nothing. Now these are investments. Yes. Now this current investments, trade investments, and non-trade investments. So let us say we have non-current investments which are other in nature, and so we select all these investments and map it over here. Now we move to loans and advances, which are secured capital advances. We have none maybe, and then now we move to unsecured loans and advances, which are in the nature of short-term loans and advances and other loans and advances. So let's see if these are the loans and advances under assets. Yeah, so we select all these ledgers and map them over here. Let's see if we have this GST input receivable. Yes, it is there. And then we have this balance with government authorities. Yes, there is TDS. Yes, these are balances. And now other non-current assets, do we have this deposits? Yes, CDCL and telephone deposits. Now under inventories we have closing stock in trade. Yes, and under this trade receivables we have unsecured, considered good. So these are the all the debtors. We select all and map them to this. Now current account, bank balances. These are the current bank balances, and then this is cash in hand. Yes, and then these are the bank deposits. Yes, these are all FDRs with accrued interest in bank deposits. Now, yes, we are at the end of balance sheet. Let's see if we have left any unmapped ledgers in balance sheet. Okay, these are all unmapped ledgers. Okay, so as we have discussed earlier, that note 3 pertaining to the capital account and note 11 pertaining to the fixed assets, these ledgers will not be mapped. We have to prepare this two notes manually. But the difference due to these two notes heads is this much: 30 lakhs in current year and 16 lakh 74,000 in previous year. Let's see if our balance sheet shows this much difference only. Now, yes, the difference in balance sheet is 30 lakhs and 16 lakh 74,000, which is attributable to net total of unmapped ledgers. That means whenever we map this note 3, complete note 3 and note 11, then this difference would be covered up and balance sheet would be tallied. So now another aspect is that after preparation of these financial statements, we need to prepare list which are part of the notes forming part of these financial statements. So for the purpose of this preparing list, we go ahead to list to note sheet and click here to prepare list. Now in our given set of financial statements, there were miscellaneous expenses which required consolidation, and say there were trade payables and investments. Now the order of this would be like the 9, note number 9, 12 and 25 would be sequentially. And so now we click OK, and list would be generated on this particular sheet. List number 1, list number 2 and list number 3 are generated with respect to the respective note numbers. Now these are all printable and can be attached to the financial statements. So this is how we prepare balance sheet, profit and loss account, and from the tally data in this utility. And one important aspect is with respect to the say change in data. For example, while auditing, we may have to change certain entries and the data balances get changed, and then we start the re-import exercise right from the beginning. So we complete step 1 to step 10 and generate the financial statements, and then with the new data we want to compile the financial statements. Now while compiling, this would give us a blank sheet. Earlier we have done that exercise of compilation. We have mapped the ledgers. Just what has happened is that only certain balances got changed due to say correction entries also. So now we need not map again. We have the previous mappings saved in here, and so we load the previous mappings at a click of a button, and let's see whether our profit and loss account tallies. Yes, so all the previous mappings are uh, taken care of, and the profit and loss account is accordingly generated. So if there are any new ledgers in this newly imported data, that only ledgers we need to map, and that would be also showed in this particular list of unmapped ledgers. Similarly for balance sheet also, yes, if we have changed the tally data and imported a new one, and we again go for compilation of the balance sheet, we can import the previous mappings for this sheet, and the balance sheet data would be compiled. Again, this same amount of difference for note 3 and 11. And if you want to clear this entire mappings, then this button is relevant to clear all the mappings for profit and loss and balance sheet. Now if you want to clear the entire data, that is we have to start again from a clean sheet completely, then this button is relevant for hard reset. So this button would reset the entire financial statements as well as the entire imported tally data, and will provide us a clean slate to start again from step 1 to step 12. Okay. Now One important aspect of this utility is with respect to the next year's compilation of financial statements. Now, this year we have done this mapping exercise in this utility, and we have got all these balances ready. So next year we need not map these balances again while preparing the financial statements. So there is a facility to export the mapping to next year financials. So these are all mappings. This will be exported to and saved in a Excel sheet. And next year, while preparing the financial statements, we will again in our utility use these exported mappings to simplify our task of preparation of financial statements for the next year, so that we need not carry on the exercise of remapping again and again. So this is the facility of preparation of financial statements in this utility. And uh, I hope it eases out our task of preparation of these financial statements. And this is a flexible sheets. These are all Excel sheets, and we may add or delete rows in this sheet. And also, one feature is that if we add rows in this sheet, for example, say we need a head over here, then if we add insert, then this mapping would also extend, and we may select ledger balances over here, or if we delete, okay, then the mapping would not be available. So this sheet is flexible in that way, and rows can be added or deleted or customized based on our practice needs. I hope this function is useful for all of us to prepare the financial statements in a faster way from tally data, and in an accurate manner, and saves our time in this crucial period of tax audits. Thank you very much for watching this video, and please also give your feedback to using the utility, so that we will improvise it further. Thank you so much.